Good afternoon, this is Dan Howe, PTI Securities and Futures, coming to you for your daily wrap-up for January 31st, the end of the month. Overnight, relatively narrow range. The S&P was mostly positive as the European markets were up, the Asian markets were flat. Europe seems to still be basking in the fact that they almost have an agreement, at least everybody but two, saying that they will control themselves in the future. Yeah, that's going to work. Okay, our fundamental news wasn't so good. Our Chicago Purchasing Manager Index was a bit of a disappointment. The Case-Shiller Index was a little bit of a disappointment, as well as the consumer confidence, also a disappointment. So the fundamental news here, which had been the thing that's really been pushing us up for most of December, really has not been positive for the last couple of weeks. So we continue to kind of struggle with the market. We aren't really taking bad news as bad news, but these numbers have all been slightly disappointing. Still not recessionary, but on the other hand, not expansion either. Pretty good amount of news here today. We actually had UPS, which is a little bit upbeat. We had U.S. Steel, which was actually a little bit of a negative, but on the other hand, they had very upbeat comments to say about the next quarter, so that stock actually performed pretty good. Amazon, after the close, coming in pretty good here. No reaction yet in the market, but the numbers look pretty good. All in all, we seem to be having the same pattern here, is that we open up, sell off, and spend most of the afternoon trying to struggle back on extremely low volume. It's kind of like watching paint dry. And today we almost made it. The SPX closed 1312, down 1. Actually a little less than 1. The Dow closed at 12,622, down 21. The NASDAQ closed up 2. So we actually had kind of a mixed market here today. One thing that is kind of scary, though, is even though the fear isn't being reflected in the VIX, the 10 and 30-year notes still seem to be very well bid. The 10-year note actually fell below 1.79, 1.8 to 1.79. That's an extremely low yield and well below the Fed's target rate for inflation. So why people are buying this is simply for safety, and so that can't be discounted. 30-year is well below 3% right now. Gold had a decent day, up 7. Tomorrow we got the ISM, we also have construction spending, and at the end of the week we got the big number on unemployment. So do have a pretty full economic calendar, and once again, it seems like these numbers really do have to be good to actually get this market up and going. If they're not, at some point, bad news will become bad news again. So this has been Dan Howe, PTI Securities and Futures.